Alibaba is a growth company, so we were right all along. So you can check our other videos on the topic, and we actually foresaw that Alibaba was going to show the world that it is a growth company, especially in AI and cloud. So I'm a photographer, and in this video we are going to review the Q2 2025 of Alibaba Group, the Q1 fiscal 26 earnings, and how they actually show the world that they're going to seize the generational opportunities in e-commerce in China and around the world, but also in AI and cloud with Ali Cloud. So let's get started. So first, let's have a quick overview of these earnings, which were actually very good, even though that a lot of people on X or on YouTube are going to mention that they have missed their estimates. But the reality is that the result was actually very good, and it actually showed that Alibaba is now a growth company. So we can see on this chart that Alibaba is actually growing double digit in 3 of its main core business segments. And so we are seeing that first in China e-commerce. So Alibaba, if we exclude the Sun Art and In-Time segment, basically that they have sold, and we are seeing that they are growing in China 10% on their e-commerce. So that's actually coming from the reorganization that they had, and where they are grouping so the Taobao, the Tmall, and now the Element and the Fliggy part of the instant commerce, and when they are trying to find synergies in China e-commerce, so growing 10%, which is actually really great. And we're also seeing that in actually international e-commerce, so they're also growing very fast at plus 19%, and in the AI and cloud, that's why actually it surprised everybody, but we actually saw that in our previous video. So Ali Cloud is actually growing plus 26%, really on the back of the AI workload demand. So basically really fantastic figure in terms of growth for Alibaba, even though that a lot of parts have been excluded a little bit. So overall, so the revenue, if we exclude Sun Art and In-Time, is growing at plus 10% for the whole company. And what we are seeing is that actually Alibaba is focusing a lot on the growth of the revenue. They have invested a lot in both cloud and instant commerce, but definitely a very solid quarter, and they're growing double digit in all segments for Alibaba. If we take the figure pure as they are, so the revenue for Alibaba on a consolidated basis grew plus 2%, but this is including actually negative effect of the Sun Art and In-Time revenue, which was actually pretty big because they were big retail companies. But definitely what we are seeing is that if we exclude that, so the growth is around 10% for Alibaba, which is actually pretty great. In terms of EBITDA, so what we are seeing is that on a consolidated basis, so the adjusted EBITDA actually declined by 14%, which is actually not great, but this shows that they are investing a lot, especially in the instant commerce part and in the AI space. Another very interesting point is to see that international e-commerce is almost profitable. So which shows that actually in 3 of their main business lines, so basically China e-commerce, international e-commerce, and Ali Cloud, we are seeing very durable and sustainable growth, but also coming to profitability. So what we can expect in the next quarters actually is that Alibaba is going to continue to grow, and with a very strong profitable growth. And I think that's why the market is actually recognizing that, and that we have seen such a bump in the share price. Okay, so now let's focus a little bit more on the China e-commerce, so the first main segment for Alibaba, especially with their platform Taobao. So in this quarter, so what we've seen is that it was very strong in all different segments of the China e-commerce. So we've seen a growth of revenue of plus 9% for the Taobao platform. We've seen a growth for the quick commerce of plus 12%. And we've seen also like for the China e-commerce wholesale, so a growth of plus 13%. So overall, it's a growth of plus 10% for the segment. And actually, this shows that Alibaba is still maintaining their market share, and they are pretty strong in the market, especially in terms of e-commerce. And we are going to talk about that just a little bit later, but the actually start in April 2025 of this instant commerce, or what they call quick commerce, is actually bringing a lot of synergies. And that's what the management is actually saying, is that with the instant e-commerce, it brought plus 25% in terms of users on the Taobao platform. So on the normal e-commerce part, this shows that Alibaba is actually bringing a lot of synergies between their different platforms for e-commerce and what they call consumption. So definitely this is going into the right direction for Alibaba, and they are showing the world that they are building actually a very strong e-commerce platform with their Taobao, with their Tmall, and with their Element platform. So they are able to actually fulfill the needs of all customers in China. And so this really actually shows that synergies is very important, and that explains why they decided to actually get into the instant commerce war. So a quick word actually on the China e-commerce still. So actually we have seen that this year the China e-commerce benefited for an increase in terms of take rate to reach its 10% revenue year on year, but also of a very strong 618 festival, which delivers strong customer growth and actually brought a lot of new customers into the Taobao app. So definitely it shows that Alibaba is actually growing very fast with these different events. And also we have seen increase in terms of 8 VIP members, so basically like the Amazon Prime for Alibaba, and we show that the model for Alibaba is working pretty well today in China. So now a few words about the instant commerce, because as we said, in April 2025, Alibaba decided to enter into Meituan territory, but actually the reality is not really that they entered in April 2025, sorry. Is that they always had Ele.me, but they started to really try to integrate Ele.me into the Taobao platform, and that's what actually started the war from Alibaba with JD and Meituan on this instant commerce battle. And so why they actually did that, so the management explained that during the earnings call, and what they say is that basically the goal was to actually scale the user growth and also take the customer mindshare, because they want people to actually recognize Alibaba as a leader in e-commerce, and they want people to use Taobao app for all their different needs. So that's why they felt that this was actually a strategic move, and that's why they are investing significantly behind Ele.me and this instant commerce platform. And basically what they've seen is that on average they have 80 million orders basically, and they are showing that they are becoming at least the number 2, even like the number 1 player so on the space in terms of instant commerce. And so what we have seen is that, like we have seen, this actually brings a lot of growth in terms of traffic, because there are much more use cases for the Taobao app with this instant commerce. So bringing a lot of food delivery, for example, of fresh items. But this growth in terms of traffic also brings in terms a lot of growth in apps, but it also brings a lot of cross-selling as well. So this is actually a very great win-win for Alibaba to integrate this instant commerce with Ele.me into the Taobao app. So I think that the management here have done a pretty great job, and this actually showed in this latest Q2 2025 earnings. And so the management also reiterated the fact that to win in terms of instant commerce, like they need to optimize not only the customer mix, but also to optimize the order mix, meaning that they have to work a lot to be able to fulfill the different needs from the customers and the type of customer that they have on the platform. But Alibaba is definitely equipped to do that, and that's what they mentioned, because this type of instant commerce requires a lot of optimization, especially in terms of warehouses, in terms of drivers, for example. But definitely this is something that Alibaba has all the tools to actually succeed. And one very important thing compared to Meituan, for example, so Alibaba does not need this business to be profitable. They just need it to bring a lot of synergies. So even if they are just break even, is going to benefit a lot the Taobao app. And that's why I think that Meituan is going to have a lot of difficulties to compete with players like JD or Alibaba, which actually are just satisfied with actually a part of the market just using their instant commerce app, and actually also like cross-selling into different other platforms like Taobao or JD in the case of JD.com. So basically, so we've seen that Alibaba has invested a lot behind Ele.me and the instant commerce part, and this is definitely a very strategic move, and they have seen that long term, this is where the whole Chinese market is going, and they definitely had to do that, and they are showing also that they are very successful today in this endeavor. Now let's move to the second pillar of Alibaba's business, which is the international e-commerce or international business. And so what we have seen is that this business is actually growing 19% year on year, and this is actually one of the key growth drivers for Alibaba. And so today we are seeing with Trendyol and Alibaba Express or AliExpress that Alibaba is being very successful. So they had actually a lot of difficulties previously with Lazada in Southeast Asia, but now what we are seeing is that they have refocused and they are still continuing growing. And we are going to see that in the coming years, Alibaba is going to continue to actually grow in different countries, like Turkey, for example, where they have Trendyol, and they are going to dominate in a lot of different countries, which are still developing nations at the moment. And I think that Alibaba has all the strengths to be able to deploy what have worked in China to other countries, especially in Southeast Asia, for example. Even though that they are going to have a lot of competition, obviously, but I'm pretty sure that they are going to be able to actually find other markets where there is not as strong of a competition, and they are going to basically bring a lot of profit and a lot of growth for Alibaba internationally as well. Not as strong, obviously, as the China e-commerce part, but definitely something to follow and somewhere where they have actually invested a lot and that they're going to continue to support in the future. Okay, so now let's talk about the best business line of Alibaba and what really surprised and I think validated the thesis that we had on Alibaba is the cloud and AI business, so Ali Cloud. And they actually did not disappoint with a growth year on year of plus 26%. This validated everything we have said about Alibaba Cloud and how they're going to benefit from the tremendous work with the Qwen models and the AI team. So what we've seen is actually tremendous growth for Alibaba Cloud coming both from the AI workloads and the public cloud, because something that we have said coming from Microsoft, but they have reiterated that from the Alibaba management is that AI workloads is requiring normal public cloud services like storage, compute, network, for example. And definitely with the rise of usage of AI, we will see Alibaba is going to benefit tremendously. And what we have seen also is that they have just announced like they are developing an AI chip to actually ease the reliance on the NVIDIA chips. And what we can expect is that in the coming years also Alibaba Cloud is going to be very strong in China, but also in other Southeast Asia countries. We can definitely foresee that Ali Cloud is in its infancy and its rise actually is very similar to the rise of AWS today, so in China and in Southeast Asia. So I think that this was a very impressive quarter for Ali Cloud, and it really shows that everything that we actually saw into Ali Cloud previously is going to come to fruition in the coming years, especially from the AI side. So I think that this was a very strong quarter. So for the Cloud Intelligence Group was around like $4 billion, so which is actually a run rate of $20 billion annually for Ali Cloud, and as we said, a growth of 26% year on year. But what's more interesting is that they are saying that the AI demand is actually tremendous. The 8th consecutive quarter, they are saying triple-digit growth in this segment, so definitely growing very rapidly and becoming actually a very, very significant part of the business for Ali Cloud. And as we said also before, is that this AI is going to actually permeate into a lot of different products for Alibaba. We have seen that with Google, and we are going to see that with Alibaba. So it's going to So Alibaba Cloud is going to benefit not only this segment, Alibaba Cloud, but it's going to benefit the Taobao business, it's going to benefit the DingTalk business, so it's going to benefit a lot of different services for Alibaba. So I think that Alibaba is actually showing the world that is becoming also an AI giant. I think a lot of people didn't want to believe it, but today I think it's quite obvious and that the market is starting to recognize it, and that's why we have seen such a rise in the share price after the Q2 2025 earnings. So plus 12 or plus 13% for Alibaba, so in the latest session, which was actually great because it really shows that the market is going to re-rate Alibaba going forward, being an AI leader, as we said in our previous videos. Okay, so now that we have reviewed the Q2 2025 earnings for Alibaba, or actually the Q1 2026 for Alibaba Group. So what can we infer from that, and does it validate our investment thesis? So the quick answer is yes. Yes, we were right all along. I think that we have to acknowledge it, that what we saw actually, especially in AI in Alibaba Cloud, is coming into fruition. So Alibaba is continuing to grow going forward and is continuing to show that it's an AI leader. So I think that what we've seen from the market, so last session, is going to continue. I think that Alibaba is going to re-rate, and I think that this is actually a great investment opportunity at the moment. It's not financial advice, but from everything that we have seen, we can recognize that Alibaba is actually now a growth company. Is growing double digits in its three main segments, so China e-commerce, international e-commerce, and AI cloud platform. So basically, definitely Alibaba is a growth company. I think that no one can deny that. It's very similar to what Amazon is doing today, so in the US and internationally. I think that at a much smaller scale, yes, but this is very similar, and I think that is going to be re-rated at the same type of multiple as Amazon going forward. And we have seen with the valuation, so if it happens, we can definitely see very soon the 200 for Alibaba. And I think that's why that every investor should actually consider Alibaba in their portfolio, because today they are still quite undervalued given the value that it provides as an AI leader and as an e-commerce leader, so in China. So my takeaway from these earnings and what we have seen from Alibaba and what we are seeing actually every single day with their Qwen model is that Alibaba is going to be an AI leader in China and actually globally. So definitely, I think that this is a great opportunity in the market still today, still after the rise. And I think that a lot of investors are going to realize that Alibaba is actually a growth company. So if you're interested in other analysis like this one, please check my other videos. Please tell me in the comment what you think about Alibaba. And also please subscribe as always. And I see you in another one. Bye.